Hello everyone, this is Marco from Forex Day Trading.com, and today I want to talk about trading the big figures. Big figures are big round numbers, also called sweet spots in the Forex market, um, like 140, 150, 160, so big round numbers. These numbers act as a magnet for the price, and I want to show you how to trade these levels most efficiently. These numbers are often more psychologically important than technically, but you will find a lot of orders clustered around these big round numbers. And also keep in mind, and this is important, these numbers are often used as option barriers. So if the price touches uh, the big round number or moves below, I should say, then the option expires worthless. So there's a lot of interest to either uh, keep the price or push the price below the big round number, or if you're holding, of course, an option, then you want to that the price is staying above the number. So there's a lot of fighting going on around these numbers, and since we have a lot of orders clustered around that level, you see the price uh, pushing in that direction of the big round number. So my first example, we have the euro dollar. The big round number is the 140 level here. Euro dollar hasn't seen the 140 level for a few weeks here back in May 2010, and then we had the downtrend here, and the price touched the 140 level and moved a few pips below. They took out the option barrier. Then usually we see a bit of a rebound um, of that level after the level got taken out, and then a second wave of selling. They take out stops below that level because longs have put their stop here below the psychologically important number. They take out stops and then they bring it up above the level. So that's a typical pattern here, and I will now explain how to trade this in the best possible way here. So let's take a closer look here at the price action. I'm now showing you the 50-minute chart in the euro dollar, and we want to really be sure that we get to the round number. The 50 level also can act sometimes as a support, so we want to see a break of that level. So we are interested in only the last 40 pips of that move. If we go to the 40 level, we would be short here at the 40 level and take out half of our profit at the round number. Only half, because we think we breached through the option barrier. They took it out, they can take it up now, but we also expect that they want to take out the stops below the psychological important number, because we no longer have put their stops below that number. We don't know how much lower it can go, but I will go for 30-40 pips in most cases, and then I take out also my second half of the position here. After the stops are taken out, we can expect a reverse here, but if we want to trade the reverse, I strongly recommend only to trade with smaller sizes, as large as half size here. So we are looking for some kind for a reverse here, for some signs of a reverse. In that case, that bullish 50-minute candle could be a sign of a reverse here, but we don't know exactly the low here, so we need to be careful. We only trade with smaller size, as I said. So as expected, the price moved up again above the round figure, came down again a bit, but in the end euro dollar made new highs here after they took out the stops, and we see that kind of reversal pattern then also over and over again. It's not always the case that they bring it up to new highs, but at least 50 to 100 pips here, and I will show that in another example later here. Here we have a more recent example. We have the euro Swiss here. So with the recent euro weakness and money going into the safe haven, the Swiss franc, that pair made an all-time low, and the 120 level was considered as a big support level here, the big psychological support level, and there was of course interest to hold that level. But you see here, after we get some acceleration here in the downward movement, we came finally to that 120 level. So in that case also we would have been taking a short here at the 40 level, taking out half of our position at the big figure, and then take out the other half here, 40 pips below that round number, because we expect that stops will get taken out here. And exactly, or almost exactly the same pattern here as we saw back in the euro dollar. First we took out that option barrier by a few pips, then there was some short covering, and then a second wave of selling. They took out the stops below the big figure here. And then we also seeing here the reverse. Here we have a more recent example. We have the euro Swiss here. So with the recent euro weakness and money going into the safe haven, the Swiss franc, that pair made an all-time low, and the 120 level was considered as a big support level here, the big psychological support level, and there was of course interest to hold that level. But you see here, after we get some acceleration here in the downward movement, we came finally to that 120 level. So in that case also we would have been taking a short here at the 40 level, taking out half of our position at the big figure, and then take out the other half here, 40 pips below that round number, because we expect that stops will get taken out here. And exactly, or almost exactly the same pattern here as we saw back in the euro dollar. First we took out that option barrier by a few pips, then there was some short covering, and then a second wave of selling. They took out the stops below the big figure here. And then we also seeing here the reverse. But as you can see, quite tricky, that reverse here. We had a bullish reversal candle here at that point, but that candle proved to be a wrong signal, false signal. The price moved lower from here, made a new low, and that bullish candle here was then the good reversal candle, and the price moved again above the round figure and even back up the 121 level here. We also saw a quick move down here, but that wasn't very important anymore. As I said, only the first touch is important touch here of the big round figures, because these levels become less and less important if they get touched more times here. We also can see this if we scroll a bit here. A few days later we also got to the 20 level, but the price went through that level with without much of a fight here, and came back to the level and then moved even below 119. So we don't interested in that level here anymore. Even that would be also a good trade here, shorting it at the 40 level, but we are only interested in that first touch here, because there's the most interest here at that level, and we can see a quite reliable pattern here. Here we have another recent example, this time the pound dollar. This pattern turned out to be a bit different from the previous ones, but basically the same, just the price action was a bit different. Also here, short at the 40 level, even we got up a bit, the price moved down to the big figure as expected. We take out half our profit here. Then they took out that level, but we didn't see a strong rebound here, and stops got taken out rather quickly here. So we're taking out the second half of the trade here. But it's really, as I said before, it's really hard to predict here the low when they take it up again above the round number here. I don't see a really strong reversal, candle reversal pattern. We just see lower highs and lower lows here. So in that case, we wait for kind of a double bottom if we want to trade the reverse. And at that point, we made a higher low, and with a break of that little swing low here, we get a bit of a retrace here to the upside, and that was worth like 30 pips. But as I said before, only with halves, traded only with half size, because as you can see here, the price was trading below that level immediately, even they took it up again above that level. So we know, we don't know, but we can assume that we trade at one point again above the big figure if they take out the stop. But the timing of the reverse is of course hard to predict. So if you like to trade it, then trade it carefully, as I said before. So let's do a quick recap here about the big figure setup. Big figure numbers are price levels like the 120, 150, 170 level, etc. We expect that the round figure attracts a lot of attention and orders are placed around these levels. These levels act as a magnet for the price if they are within reach. The setup is only valid if the price has not touched the big figure level for a few weeks. And now we go to the actual setup. We go short if the price is 40 pips above the big figure in a downtrend, and we go long if the price is 40 pips below the big figure in an uptrend. We take half of the position out at the big figure, and the second half 30 to 40 pips below the round number, since we expect stops be taken out before a reverse here. We assume that the price will reverse after the stops are taken out, and the price will trade again above the big figure in a downtrend and below the big figure in an uptrend. But if we trade the reverse, we only trade with small sizes and look for a reversal sign in the 15-minute chart. The stop for that is below the previous low, and the target is 30 pips above or below the big figure, depending on the trend here. So this is a quite simple setup. It's built on price action and common sense, and if you like that video, then feel free to check out my other videos at liveforexdaytrading.com. Have a great day all. Bye.